What's up? What's up? All right, family. Want to make a quick video on a strategy that I'm going to call God's plan. Uh, it's kind of self-explanatory. Doing some back testing. I feel like my eyes were opened up, um, to the strategy. I don't really want to talk about it too much. I'm going to hop right to the charts. So, for those of you who trade with me on a regular basis, I like trading the weekly chart. So that's exactly what this strategy is. I see an order block here on the weekly chart. All I want to do is trade this order block back to the golden zone. This also works on candles that aren't order blocks. So if I look at FJ, which is CHF JPY, we have a strong bullish candle that did not retrace yet. So this candle, all the JPYs had a good week last week and went up like 300, over 300 pips. So to start the week off, I expect a retracement back down to the golden zone before it buys back up because I feel like the JPYs are going up. Whether you agree or not is immaterial. I'm just going to show you how to get paid, from this move. It's going to sound a little bit off, but I want you to keep in mind that trading is a a bottom line business. And the fact is most traders lose. Okay. So those of you who are watching this video and don't know me, who are going to knock this strategy, I like it. I like it. But you might want to go and back test and see what you think. So all I'm doing is fibbing this candle, the same direction that the candle moves. Since this is a bullish candle, I start at the bottom of the wick and I fib to the top of the wick. You can see the wick denotes that some retracement has started. So I want to fib it to the golden zone, right? If I measure the pip count from the top of this candle down to the golden zone, I want to make sure that I have at least 100 pips because this strategy, I want to get 100 pips from this move, okay? Now, you can see there's 150 pips available here. Okay, I can't stress this enough. If you are new or if you're a beginner, do not try to get all 150 pips. Set you a take profit at 100 pips. Because here's the beauty of this strategy. If you can take any funded account. I'm going to use the $100,000 account just because the numbers are easy. If I was trading a $100,000 funded account, I'm going to take this trade. One trade. I'm going to sell EJ. You can sell it at the beginning of the London session. You can sell it once the spreads go down. I don't care when you sell it. You're going to sell it, right? From the top right here. You're going to have a 100 pip stop loss. I know nobody uses 100 pip stop loss. I get it. I get it. But for this strategy, you're going to use 100 pip stop loss. If you have a 100K account, you'll use a 4.0 lot size, right? If you lose this trade, you're going to lose $4,000. That's 4% of your account. It's done. I got it. That's a big percentage. If that's too big of a percentage for you, go down. I don't care. If you're using 1%, use a 1.0. But once you back test, you'll see why I say use a 4.0. If you execute this strategy and put the 100 pip stop loss, I don't use stop losses personally. I use hedges. So I'm going to put my hedge at 100 pips. You put your stop loss. All right. When the market opens, trust me, this is going to sell. Don't trust me. Just put it in your demo. It's going to sell. And we're going to get our 100 pips, just like we did last week for GC. But the point is, you just want to make sure you have the 100 pip cushion because we know it's not going 100 pips. But the issue that people have is the hedge picking up for those of you who do trade with me. If you have it too tight, the hedge is going to pick up and then you're nervous and you screw the trade up. So if you just do it like this and allow the trade to play out, most of the time you're going to be in the market on a Sunday and done by Tuesday afternoon, whatever. Sometimes before, every now and then you have to stay until Wednesday, but it requires no attention from you once you're in the trade. You have your stop loss or your hedge, and you have your take profit. So it's going to hit your take profit. You know, all you have to do is make sure you set the parameters. Don't be greedy, guys. If this is your first time trading the strategy, take your 100 pips. Now, if you have some experience and you were one of the ones that were successful, dropping down to the 15-minute, getting you a second entry and all that stuff, you can still trade it like that. I'm talking to the people who are not successful, who haven't found their edge. This is it. If you have a 100K account, you're going to hit $4,000 in your account this week and next week and the week after that and the week after that. So if you have a 100K account and you do this one trade, you're going to win every week. So 4 weeks at $4,000 is $16,000. I don't know what you make at your day job. It's probably a little bit less than that. After most people take their cut, you get an 80% cut. Let's just say it's an 80% cut. That's $12,800 to your bank account. So a little bit more than what you're making right now. So this is it for the strategy, right? All I did was measure the candle. I'm looking for the momentum candle. I'm not going to take a 100 pip weekly candle and use the strategy. Again, I want to see volume, right? Or I want to see 100 pips back to the order block. And in this case, we get both. We get 150 pips back to the golden zone, and it's close to the body of this order block, which is all gravy, right? So regardless of whether EJ buys or sells, last week we had EJ selling and we bought it to the order block. And you see it, if you had bought EJ last week, you'd have won 300 pips if you held the trade. I'm not encouraging you guys to hold trades if that's not your comfort zone. I'm encouraging you guys to utilize the strategy, which is 100 pip stop loss, 100 pips take profit. And then you'll find yourself on the winning end of these trades every week. Okay. If you guys have any questions, do let me know. All right. I want you to understand this. I don't care about entry. This doesn't matter. Sniper entry, that's all bullcrap. You want the 100 pips. I don't care what your entry is. What I care is that your take profit is 100 pips, right? So if you wait until the London session, right? If you miss your entry during an Asian session and you wait until the London session, 9 times out of 10, this is going to liquidity grab and right before a London session, and then it'll start pushing down again. So it doesn't matter if you don't get in the hour after the trading starts on Asian session. If you do, that's fine too. That's the important piece. Don't add to it. Don't take away from it. If you're going to use less than that 4%, if you're going to use 3% or 2%, that's cool. All right. I'm going to use a 4.0 on my 100K account. All right. Because I've traded this strategy for over a year, and every week I get paid. So that's all. That's, I know it's kind of dumb, right? It's kind of dumb. That's why it's going to work. And nobody else is doing. You've never heard anybody use 100 pip stop loss. So you do what everybody else isn't doing. If nobody's using 100 pip stop loss, maybe you should try it. All right. Good luck. I'm calling this God's plan. You'll see why.